Hi, this is Kevin Schumacher with the Kevin Schumacher Team here at eXp Realty, bringing you your monthly market trends update. The million-dollar question is when is the economic recovery going to begin? Has it begun? Is it days, weeks, months? What's the real estate market going to do? Will it rebound quickly? Will it drop? Will it go stagnant? So we've been talking to a lot of local, regional, and national consultants that are really helping us compile the data to bring you the facts so you guys can make good decisions based on what your real estate needs are and going forward, whether it's in the weeks, months, or years to come. There's three primary factors what the consultants look at: the business science, health science, and people science side. On the business side, they're looking at historic data. They're saying, okay, as far as what's the recovery times look like and what was involved in the recovery of the different market conditions when you look at pandemics. The next thing they look at from a health science standpoint is with COVID-19 specifically. Is it under control? Are the cases growing? Are they starting to stabilize? What's the latest update with a potential current vaccine? And will there be a flare-up? And then the third thing is the people science. The people science is more consumer driven, and that's when are people going to go out and start spending money? When will the consumers be back to their normal spending habits? And spending habits meaning going to the movies, travel, flying on airplanes, going to sporting events and venues, and what will that look like as well? So those are the three primary things that they look at. Most of the consultants and people you talk to believe that the recovery will begin right around the second half of the year. First half obviously was very devastating for a lot of businesses. For many businesses, things were put on pause, but for a lot of other businesses, it was catastrophic. So from a recovery standpoint, one thing we look at is when you look at, we're about 30 days away from that second half of the year starting, but here locally in the Front Range, we're ready to starting to see a spike in activity, especially on the real estate side, with many businesses opening up in the weeks, but even some in the days to come. We'll continue to see more of a quicker recovery. So when we look at showing time, they track all of the traffic as far as showings on listings and the buyer activity. So when we look at our most recent projection, it goes back to showing the numbers in January, actually the second week of January. You look at the numbers of where we are at, showings obviously dropped, and now you look at where we are here in the last couple weeks. Our showings actually are at the same level that they were in the second week of January. One of the things to remember is January was an amazing month when it came to record number of showings as well as homes going under contract. So it speaks highly of the volume, and some people may say that it's pent up interest. The jury's out, so we'll know a lot more in the next probably 30 to 60 days where we can forecast out a little bit further. But based on what we're seeing now, our market's starting to recover very quickly, and we're continuing to see upward prices going upward instead of going stagnant or even dropping like many people projected. One of the things that when a lot of the analysts and the consultants look at is homeownership surveys. And when you look at that, over 65% of people out there are a homeowner. And you look at that 65% number compared to back, I believe it was around 2002, that was the all-time record high, which was 69%. So really strong. Many people ask, why is that? Well, it's the median rent. The median rent keeps climbing and climbing and climbing, and it's forcing more people to go into home ownership, where there's some tax benefits as well as far as deducting your property taxes, mortgage interest, and so forth. When you look at all of the percentage of homeowners that are out there, over 42% of homes that are owned are completely paid for, which is an amazing number. I believe last month that number was like 36 or 37%. Of all of the homes that are owned out there, over 58% of those homes have a 60% or greater equity position in their homes. So again, a very strong number. And with the average equity position of most homeowners nationwide, $177,000. So that's definitely a significant difference when you compare where we are today back into 2007, 8, and 9 when we went through the Great Recession, and looking at those numbers. Because back then, many of the people were using, they had home equity loans, and they were using the equity in their home like an ATM machine to go buy cars and vacations and things like that, or at least a good percentage of people. So when the market did take a drastic shift, you had overinflated prices and people had no equity. So if they did get in a pinch, they lost their job, then they had no choice but to give it back to the bank because they could not sell the home for what they owed. Where today, unfortunately, there has been a lot of people that have lost their jobs, but they have a high equity position. So they can sell their home, take advantage of that high equity position, and then go short-term, rent their home out, and get back on their feet with a new job opportunity. So the big monkey in the room, unemployment. When we look at the unemployment numbers, 3.2 million Americans are unemployed, which is a huge number. I don't want to downplay that. But that number is less than what it was a couple of months ago. So we are on the decline, which is a great sign. And when they break down those numbers and you look at the percentages of people that are unemployed, over 38% of those people are bartenders, waiters, and so forth. Not saying that that's not a valuable job, but that's in the sector of people. As soon as these restaurants and bars open up, those people are going to get their jobs back very quickly. So that piece is going to fill very very fast. When you look at breaking down those numbers even further, when you look at 85% of Americans are unemployed. And when you look at the unemployment sector, of the people that are unemployed, that 10% or so of unemployed people that are unemployed, 31% of those people are teenagers. So those are people that are teenagers that are going to college, summer jobs, and so forth. So those are some high numbers when you break down, you really dissect what the true numbers of the unemployment piece looks like. So with that said, let's really get into our numbers. The numbers are still pretty skewed as far as our local numbers in the Colorado Front Range, but let's break those down a little bit and see what they look like. So when we look at Larimer County, there's currently 911 homes currently on the market. Last month, 371 homes sold. That number is actually down by approximately 14% from the month before. When we look at days on market, we're looking at 76 days, average days on market, with an average sales price of $491,000, which has stayed pretty true in the last 6 months or so in Larimer County. And then when we look at when we look at the current inventory is 3.2 months. That's a 68% increase. Now, what you have to remember is the real estate market shut down, and we couldn't even show property for 30 days. So 30 to 45 days, something like that, where we couldn't even show. So a lot of the sales were homes that were already under contract back in December, back in January. Maybe they were new construction homes that were being finished. So again, the numbers can be somewhat skewed. Also remember, when you look at months of inventory, Larimer County, 3.2 months inventory, that means if not one home hit the market, we would be out of inventory in 3.2 months. We had 46 days in January. So is it one up? It definitely has one up, but not near as significant as what we would have anticipated. So looking at Weld County, 919 homes currently on the market, 357 closed last month, 17% decline. 60 days, average days on market, $405,000 is the average sales price for Weld County. 2.8 months inventory. That number is actually up by 28% compared to the month before. When we look at Boulder County, 512 homes currently on the market. 201 homes actually closed last month. That number is down about 22%. 49 days. Average days on the market, $696,000 is the average sales price. So we've seen that number fairly consistent over the last 6 months as well in Boulder County. 2.6 months inventory in Boulder County, and that number is actually up by 23%. And then when we look at Denver Metro, the biggest piece of the puzzle, 2,900 homes currently on the market, 2,010 homes sold last month. That number is actually down by 14%. Average days on the market, 19 days. So what that tells us is there's still a lot of new construction that's out there. And again, the thing that always skews the Denver metro market numbers is that a lot of times they don't report the new construction. They don't report those listings until they actually close. So they show as a new listing and going and so it be selling at the same day. So again, numbers get a little bit skewed. Of that, average sales price, $525,000 average sales price, 1.3 months inventory. That number's up about 18%. So that's sort of a snapshot of what the numbers are here in the Colorado Front Range. What we anticipate is we anticipate that we're going to continue to see that pent-up demand with buyers out there. We're not going to lack buyers going all the way through probably third quarter is the short-term projection. Anytime you have that it's an election year, and with all of the things going on, it's hard to say what will happen after we see the results of the election. So we just don't know how the year will end up in fourth quarter. But we do know that we have record low interest rates. The rates are going to stay low through the summer, which is going to be great. We also know that we're going to also have more of a life cycle, life decision based selling market. What I mean by that is we still have people that are making moves into our area for job relocation and out of our area. We know that there's still people that are selling their homes based on liquidating estates. We also know that people unfortunately are going through divorces and fortunately getting married, and families are expanding, and other people are retiring and downsizing. Those are called life cycle, life events. And so we'll continue to see that, and we see that every single year. So what I would say is if you're currently wondering what your current equity position is, or even how the market has affected your value, or you want to just look out 6 months, 12 months, 18, 24, whatever it is, and know what your situation is, reach out to us. We're here always to help, and we want to bring you guys the facts and the numbers so you're well informed and you can protect one of your largest investments that you probably have, being the equity in your home, for many at least, and also help those that haven't made that purchase yet, those first-time home buyers, be able to acquire their first home and start building wealth as well. So as always, we're here to help you. You can always reach us at kevinsellsco.com, 720-230-3030, and we look forward to talking to you next month.